Assalamualaikum and a very good day to all viewers out there. Welcome back to my channel, and this is the second video from our discussion on question Qistina, which is the question that discussed the preparation of statement of cash flow under direct method, and what we did was we choose an intermediate level question, right? So therefore we are already now in step 4, where under step 4 what we did was we had calculated the cash flows from financing activities, right? And we have already found out the information on cash flow from financing activities. For your information, I'm using the bottom-up approach of preparing a statement of cash flow, where I start from the bottom, which will be the cash and cash equivalent, and then going upwards up till cash flow from operating activities. And I'm already halfway through, which we stopped at cash flow from financing activities. So if you want to see the first discussion, the video is available. The link is somewhere at the description below. Go and check it out. Right? So for cash flow from financing activities, you will notice that I didn't make any workings. So if you check, those information were directly given in the statement of financial position, statement of changes and equity, and a statement and financial position, right? So that's why I didn't make any reconstruction of T accounts, even though sometimes you may do so. But here it was somehow, if you check the additional information, even in the movement section here, this one is actually the additional information, right? Okay. You would see that even in the additional information, there were no information explaining detail, except for to confirm what I mentioned, the issuance of shares were for cash. I mentioned that earlier when we were looking at the statement of changes in equity. So issuance were for cash, so that one under the financing activities. So the rest of the information here were all related to your investing activities, which is our focus in a short while, right? Okay, then let's go and look at step 4. Now we are looking at how do we calculate the cash flow from investing activities. And to do that, what you would do is you are going to set up the accounts that is within the context of investing activities. Investing activities are about acquisition and disposal of long-term assets. Long-term assets are long-term non-current assets. So if you look at the information here, you can see that the details of your non-current asset is given here. However, to support the information, you are given the additional information at the bottom here. So the first information here is on development cost, which is under intangible assets. So these are information that relates to your item which are investing activities. These are also things that will relate to investing activities, because our target is to find out what are the cash outflows or cash inflows in the development cost. So you also have one item here which are non-cash item. So for non-cash item, I'm using blue. All right. So for non-cash item, blue. Yep. Okay. So if you check acquired and capitalized during the year, so this one is telling you that there were some acquisition of your development expenditure. So there was some acquisition of development cost, intangible asset, and this is an outflow of cash. So to confirm that, we may have to go and reconstruct the development cost account, but however the information here is enough for you to put in your investing activities as one of the first item. We will be doing that later. We just want to investigate that, right? So these are also under your investing activities. So that's the information here. You are informed about the purchase of investment property, which are also acquisition of long-term non-current asset. Here the information is related to PPE, which is long-term asset, but that information is about non-cash item. So I put blue there. Same goes here, non-cash item, right? So the non-cash item here, this 500,000 is the one that you need to adjust out from the cash flow from operating activities. But here we are talking about information relating to investing activities, which we are interested in knowing what are the cash outflow and cash inflow, what are the cash that we paid to acquire it, and what are the cash that we receive to have disposed the non-current asset. Okay, as we go along, we will also find the item related to non-cash expense and non-cash income. So this one is also related to the acquisition of, not acquisition, this was related to disposal, which is the recognition of non-current asset. Another blue there. Same goes here, but this one is related to the acquisition, blue. And you would see that the information 800,000 is the amount that was spent in cash. And here you may have to check out how much is the disposal. The last item here is telling you about investment that were being disposed, which gives some cash inflow of 840,000. Okay, I already color coded all the item, and this short-term investment we have already taken into consideration much earlier, where that one was under our cash and cash equivalent. Okay, cash and cash equivalent, we have done that, right? So let's do what we have to do. So first, let us look at our item PPE. So for our PPE, if you can see here, you can see no changes. However, that is not true, because you will inform somewhere at the bottom here that these are the items that relates to PPE, number 4 and number 5, as well as number 3, where there are depreciation related to PPE that was non-cash item. So for things that you can get directly, which is item number 5 that you acquired during the year, you can straight away put that in the statement of cash flow. So you can put it here straight away. So let's say your first item, we just have to highlight to you. Your first item is acquisition of property, plant and equipment, and this was directly from the figure given earlier, 800, right? That was 800, that was given here 800,000, so we put it there. However, there are also information that told you that there is some disposal. So we need to check how much is the cash that we receive from the disposal. To do that, you need to go and set up your PPE account. And for your information, the PPE was at carrying amount. So what you need to do first is set up the account, put the balance brought down, put the balance carried down, right? And include the item that you have here, which is the surplus. Where is the surplus? The surplus relates to the PPE. So I include the surplus in the PPE account, where if you can check your other comprehensive income section here, there is a revaluation surplus, and if you check the bottom part of it, the statement of changes in equity, you also have this revaluation surplus of 100,000, and this is also a non-cash item, and you need to include this to be able to get the correct disposal that you receive from the derecognition, the disposal proceed, right? So this 100,000, you credit your ARR, right? So when you reconstruct, that will be debited to your PPE account. After you have done that, you will have to go and put back your item that relates to the acquisition. Yeah, your acquisition. Sorry, not this one. That one is the profit. Never mind, we'll put that together. The acquisition. That was 800,000. So I remember this one was the cash outflow because we credit cash. Apart from that, you were informed that there were a disposal. So when there is a disposal, there will be a likeliness that you'll get a profit or a loss. So in our case, if you check your information here, you will see that these items that I'm highlighting, these are all items which are non-cash and non-operating item. For example, loss is a non-cash item. Income from investment is a non-operating item. Yeah, and therefore, these are all things that need to be excluded from the statement of cash flow, where you prepare that and you put them normally under your indirect method, where you prepare your operating activities. But for here, this one is just to tell you that these are the items that are non-cash and non-operating. So non-operating is just income from investment, right? So you have one item here, profit on disposal. So if you add here, it means that you credit, right, your disposal. Here there is no disposal account because the asset is at carrying value and the company adopts revaluation model. How do I know? Because there is a surplus. So the profit is being included here. So you have to put back whatever items that you have in your statement, put back to the PPE account. Check how much is the disposal. How disposal is normally being credited, but we don't have our PPE account here in terms of the disposal. It was at carrying amount. So to get this, how do you do it? You are going to add the carrying value. You're going to add the carrying value with the profit. So if you add the carrying value with the profit, you will get 630. Before that, you are informed that there is depreciation as well. So if you check depreciation of the PPE, if you check, it was not given directly here. Yeah, it was given somewhere here at the bottom here, somewhere here. Yeah. So that depreciation of 500,000, debit depreciation, credit accumulated depreciation, that is a journal entry. But somehow there is no accumulated depreciation given because your asset is already at the carrying value. So it was not stated, but because there is no information given on depreciation elsewhere, we assume that is at carrying value. Here it is at fair value. Why? Because the company uses fair value model. If you check the one at the bottom here, yeah, that one is for your investment property. But we are talking about our PPE, where our PPE you have 25,000, but that one is at carrying value. Carrying value means at cost minus accumulated depreciation. But since this is going to be at revaluation model, so therefore you have to take into consideration the revaluation changes, which is either a surplus or a deficit. So because it was at carrying value, we don't have depreciation account that were being maintained, and it was actually included already in our admin expenses. The depreciation account was actually part of the admin expenses. The accumulated depreciation account was not shown. So I put back the depreciation. In case you have any impairment, put that there. So the missing figure here is actually, if you total up this section, 26,130 is the total debit. If you total up the total debit, you get 26,130. And this 26,130, if you take that figure, you deduct with the balance carried down, you deduct with the depreciation, you'll be able to get the disposal proceed, which is 630,000. So this 630,000 will be included where? It will be included in your cash flow from investing activities. So this one will be cash flow from investing activities. We put blue here. Okay, 630. And this surplus, just to highlight, this is a non-cash item. These are also non-cash item in case you come across impairment. Profit on disposal are also non-cash item. So we will exclude the non-cash items and non-operating item because in our case here, non-cash item is excluded to arrive at cash flow from our investing activities. So we have that, we got that already. Now we are going to reconstruct the investment property account. If you check your information given, we are done with that. So we're going to put a tick here, copy here, and put a tick for both because we're also going to check the investment property. So our investment property, if you check, you are informed they use the fair value model. That is why I put the word fair value here, at fair value. So meaning that if you follow fair value, there are no impairment, there are also no depreciation for the investment property. Right. So you are informed that on top of that, there were new acquisition of investment property. That new acquisition, we will have to work it out. How? By opening up the T account. Before that, in your section, in the statement of profit or loss, this item is the loss on change in fair value of investment property. Remember the journal entry, debit the profit or loss, credit investment property. So we need to go and put back those items here. We reconstruct how? We put the balance on the debit side, 2 million. These are all in million, this account. These are also in million. So all calculation is to the nearest ringgit Malaysia. And our ringgit Malaysia is our currency. So that was to the nearest million. So same goes here. And we put the loss because loss is debited to the profit or loss. So loss. And to find out what is the acquisition that involve cash, we will total up the credit side. Total up the credit side. Total up the credit side. And the total credit side is now the total for the debit side as well. And take that total here. Take that total and deduct with the balance that you have. If you do that, you'll be able to get the acquisition of investment property for cash. And how much is that? That would be the amount 500,000. So this 500,000, 500,000 will be included in your investment property account here. Because we reconstruct. And at the same time, that will be part of the outflow in your statement of cash flow under investing activities. So let's look at that. So I put the color here for you. That one will be blue. Okay. And then this is also blue. This is blue as well to show that these are the cash effect of it. Okay, now we put the item for investment property. That was acquisition of investment property for cash. If this is not for cash, do not include. Next is for us to check if there is any disposal. No, there are no disposal. We go on to the next item, your investment. So for investment account, I've already opened up the account, and for your information, the investment, the detail of the investment is here, right? The long-term investment, 460, that was for investment account. So I've done this. I also have done this part. The changes is a net decrease, right? A net decrease. And let's look at the bottom. What you have at the bottom here is the information on the long-term investment that was disposed during the current period. So the disposal, the carrying value was 840. You need to go and check how much is the proceed from disposal again. To check that there is no depreciation because investment is not depreciated, but somehow you have the profit on long-term investment. So take that 640 and add to the carrying value of 840,000, and that one will be your cash inflow from the disposal of investment. So here we put the balance. I've done that. This one we put the balance. I've done that part. Yep. And okay, put the balance. This is the total, because the total to here is from the information given here. So if you look at this side, the profit given was 640. Where do I get this? From the profit or loss. And remember, this is a non-cash item, so I will color code that as blue. You don't have to do this actually if you are already well versed, but this is a learning process, so I'm doing that. But if it's for exam purpose, you can skip. For the cash flow from investing activities that involve investment, long-term investment, it would be this much, which is 1480. And that 1480 is because you take the carrying value and you add with your profit, and therefore this is going to be your proceed from the disposal. On top of that, if you total up the credit side, and you can see that there is a missing item here, missing figure, and that missing figure is 380, and that 380 is you take 3520 minus 640, this profit, minus 380 minus 2005, and this is actually relating to the acquisition of investment, acquisition of long-term investment. So that acquisition of long-term investment is 380. So with that, you got your information on investing activity. So put this item 380 and 1480 in your cash flow from investing activities. Okay, cash flow from investing activities. You have two items there. One is the disposal, another one is your acquisition. Apart from that, you also have another item that is your intangible assets. So your intangible asset, you can see here there was development cost, and the detail is given at the bottom here. At the bottom here, you are informed there was some acquisition of development cost during the year that was for cash, 680. So that's 680 because you spent cash credit bank, debit development cost, and later you capitalize it. So that is why it become part of the non-current asset. It fulfill the criteria for capitalization. So 680 will be included here. So the detail, you don't have to work out that in your T account, yeah, because that was available from information number 1. Same goes for your acquisition of PPE earlier. It was from information 5, if you check information 5. But the rest of it, you may have to work out the T account to get the item. The last item that should be in the cash flow from investing activities is income from investment. So income from investment can either be from the income coming from interest or income coming from dividend that we receive from other company. So the income from investment is included when we calculate our operating profit. However, it should be excluded because those are non-operating items. So it should be excluded. So that is why it will be excluded when you prepare that using the indirect method. And for this question, we are going to prepare a statement to reconcile that. So statement reconciling the profit before tax to the cash flow from operation that we'll be doing. So that's why I'm mentioning about that, because in our last section we'll be doing the statement to reconcile profit before tax, which is our agenda here, to the cash flow from operation. So income from investment, go and check if you have any income receivable. Yes, you do have. You can see the section there, interest income receivable. So you need to go and take it out and go and make it, copy and put them in your your income from investment account to arrive at how much is cash received from the investment income, cash dividend, right, that you receive, or cash, the interest income. So if you do that, put the balance on the correct side. If you put that, you will be getting something like this, yeah, where first put the balance brought down, put the balance carried down correctly, and there was some interest earned. That interest earned is in your SOPL, right? But we are interested in the interest received. Yeah, interest earned is in the SOPL, but we are more interested in the interest received because those are part of the cash flow from investing activities. So this cash that I put here is because we receive cash. How much? By putting the balance brought down, put the balance carried down, put the interest earned. Where do you get this? In the statement of profit or loss. And lastly, you get your item cash interest received, or the dividend. So not dividend, it is an interest income received of 708. So that figure will be included here. Okay, it will be included here. All right, and this is just to show you the reconstruction of development cost that I've done. Yeah, this is not required since it is given, but in case you have more complex situation where you are also involved with amortization of development costs, right, and this is at carrying value, maybe you need to consider looking at how do we adjust or reconstruct the development cost to arrive at any cash flow movement, either acquisition or either any disposal of development costs, right? But here it was about acquisition. In your case, the 400 that were included here is actually a non-cash item, just like depreciation, where you include that in the admin costs, the SOPL, right? And therefore our focus is this actually, which is the highlighted red 680, and I've already included it here much earlier. This is just to show you what happened. With that, I thank you for watching. I will continue with cash flow from my operating activities in my next video number 3. And after I've done that, this part, I will also be showing you how to construct that using a T account. This one, the one I'm showing here. And later, after we have done that part, how do we reconcile the cash flow from this section from operating activities, and how do we prepare a statement to reconcile that. With that, we will somehow there at step number 4, and we're going to continue with step number 5 and step number 6 together with the statement of reconciliation of profit before tax to cash flow from operation. With that, I thank you for watching. Assalamualaikum warahmatullahi. I'll see you when I will see you.